Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and today we are here with a live Forex and cryptocurrency trading analysis for July the 14th, 2021. Before we get into it, let me just show you our disclaimer to remind you that this video is for illustrative and educational purposes only. Some of the stuff is in delay, especially if we show you any of the future stuff, and we will be getting into it in just a moment. Before we get into it, there are some trading signals we're going to go over that are high probable Japanese candlestick patterns, and if you want to learn how to trade them, you can read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And also don't forget to like and subscribe to our YouTube or Twitch channel, Forex Trading Unlocked. And here we are with our live screen, and since we have our live screen up, let's go show you our YouTube channel real quick. If you haven't been familiarized with it, check it out, Forex Trading Unlocked. We usually have our current weekly analysis video up on the main screen, but we have all our uploads from previous webinars, our playlists, our featured channels with companies we work with. We do a TFNN.com interview every Wednesday. We just completed one this morning. We're on at 8:40 Central Standard Time almost every single Wednesday. The Nadex, we have a playlist with webinars we've done for them. eoption.com. We have a bunch of webinars that we've done with them. We have playlists for all those different ones you can go through. And we have a new webinar for eoption.com coming up too. So subscribe to our channel so you know when things are going on about that. And our Twitch channel also, Forex Trading Unlocked. If you're a Twitch person, check that out. And you can always go and get on the chat as well in both of these. So both of these have chat rooms. And we'll go, let's see, we'll just update this one so you can see how we're live. So if you like and subscribe, but also you can go on the chat, which is huge. So you can interact with us during this video if you like. All right, so we have some people on Twitch and also on YouTube already tuned in. So let's get into our analysis now. All right, we already have the workstation page pulled up, and we have the Euro US dollar. All right, let's make this a little bit bigger so it's easier for you guys to see. I think this probably is better for you guys. All right, now let's go and put on the Dixie. The dollar index yesterday fell just short of making a higher move high. It's going to be very interesting as we go through these cross rates and even look at the cryptocurrencies on what's going on. It's kind of like just a tug of war. It's like one day up, one day down, not really doing much, but the trends remain in place, and the divergence we've been talking about in the marketplace is definitely obvious. So we'll see how that goes. Now the dollar index, as far as being a bull or a bear versus most currencies in the dollar, as we get through this, you'll see you can't just go off the index. Some of them are definitely in a bear market versus the dollar, the euro being one of them, which is the number one component of the dollar index. So the euro is probably one of the main things wagging the Dixie tail, and that's why you're not going to see big extreme moves in the dollar index either, because so many other currencies are not doing the same thing. So let's explain this to you right now, what's going on. All right, so for the euro US dollar, yesterday we made a lower move low, and then we reversed gears today. So we've been making lower move lows and lower move highs, which is indicative of what? That is a bear market. So the trend is your friend. Now the steepness of this trend isn't really too bad. It's obviously been grinding lower, as you can see over the past couple of weeks. We haven't had any big moves like this. I don't really expect anything like this to occur. What I am looking for is that we have some key pivots here. Only if we take out this high from a few days back around 118.82 do I think we have any chance of really breaking out to the upside. Main reason being is that it is channeling pretty much down in this little area here. By attrition, we can come through it. But this is a key lower move high that keeps the trend intact. If we get above there, obviously the next key one would be this high here, but we have a lot of room to the upside, and that would be just viewed as an upside correction. We had this buy signal here that only lasted for a day before it fell apart, and then we made a lower move low. So that's kind of key. If you have to look at how things are going, no matter what, this market is in a bear market. Lower move lows, lower move highs is a bear trend. So be cautious as far as trying to catch a falling knife. I think if you're a bull with the euro right now, you're going to have a really big grind of a trade, meaning that today you're doing all right. You can see that we're just below the highs of the day, but it's a grind higher. It's not going to most likely continue to propel itself. If you look at the hourly, how this shapes up, look at what it's doing. Overall, it's making lower move lows, lower move highs, lower move low, lower move high. Now, boom, even here, we failed to take out on an hourly this key pivot here. So if you're a swing trader on the hourly basis, this is big. We've been railing off this lower move low, and here we're falling just short. So I would say that this level is another one as well to be mindful of. So we have 118.82 as our critical breakout level on a daily basis. But then we also have the hourly. Like, in order to get to 118.82, we of course have to get above 118.33. This is an area where I think you're going to have a lot of resistance. Notice that our daily line also comes in on this hourly here. So it's most likely that we're going to see, even if we get above here, some sort of a big resistance area right here. It's very likely, especially when you have this prior low right here. A lot of support. This is where it fell out. This is where resistance came in here. So this area is most likely going to buffer the euro US dollar. And I wouldn't doubt that you're going to see this one actually probably wither away by tomorrow. Meaning that yesterday it was down, today it's up, getting a little relief, but it makes a lower move high, and then boom, we have dollar bulls come back and we slam the euro US dollar. So for aggressive shorts, I would say you can probably look at in this area, it's probably a very low risk sell with 1882 obviously being your main risk level. Now, as far as targets to the downside, I believe that if we do come back and fall back on support, especially take out this last prior low over here around 1775, this would clean up. This is 50 pips right here, and then you have another 50, like 60 pips here, so, or 65 pips here. So just by shorting into this area here with this as your risk, here's your minimal downside target, where once we get below that level, look out below. I don't think it's going to slam like in a major way. We're not going down to like 113 or 114 even in the euro US dollar anytime soon, but it is very likely that we can get down to 117 half, 117 even easily on the daily chart should we start to fall back on support. So as you can see, that let's get these arrows out of the way, put them over here. So as you can see, most likely we're going to see a little bit of consolidation coming through here and then treading lower move lows again. So the hourly, unless we get above this 1832 area, confirms that resistance is heavy, the trend is your friend. Right now we're coming off a lower move low, looking to make a lower move high. So we're looking at a sell situation right now. So as far as bulls, this is your line in the sand here. You should definitely have your stops just below this low here, because it may only tick a little bit through it, but it's still making grinding new lower move lows, meaning that the trend, no matter what, is going to eat you up. So stop trying to catch a falling knife. We've had a couple buy signals on these little dips here, lower move lows, that didn't sustain themselves. This here was a buy signal. That only lasted for a few days. It did hit the short-term target, but it didn't even come close to hitting the longer range target. Same thing happened last week with this buy signal here. Let me get rid of that arrow there. Okay, so this buy signal here lasted for a day, boom, set the lower move high, and then you can see that it fell apart, especially yesterday when it made lower move lows once again. So this is very key for you to be mindful of if you're an intraday, especially if you're trading the hourly or half-hour charts, that we are still looking to sell into rallies, not buy into breaks. If anything, take profits on lower move lows, just because the sell-off is most likely not going to be that extreme. Remember, we have Chairman Powell, Fed Chairman, speaking today in the U.S., and inflation is something they're going to cover. I know that they're looking that things are going to stabilize and be okay. The numbers just don't seem to be meeting it. Be mindful. We have oil numbers that are about to come out. See how those come out today, and then we also have the unemployment claims tomorrow. Unemployment claims are going to be very, very big. Something that you want to notice what's going on with the euro US dollar and most other currencies is what's going on in the treasury bond market and the 10-year note market as well in the futures. We'll get into that in a little bit. So now let's go to the British pound. US dollar and show you how we have divergence. So notice how with the euro we came off a lower move low after a lower move high. We don't have that going on in the pound US dollar. Look at what we have here. Pound US dollar, we set this low at the beginning of June. We set a lower move high. Then last week we made a higher move low. So now we have divergence in the European currencies. Now the pound is the second biggest weighting of the dollar index. And this is when I said about the dollar index where the euro is going to lead that chart. The dollar index is probably going to look very reflective of what the euro looks like for the next probably couple weeks. But the moves as far as, let's say the dollar index continues to make higher move highs because the euro makes lower move lows. The pound is not going to reinforce that. So that means you're not going to see an overzealous rally in the dollar index. So for a pound, we're going to look for some trade setups with this one. This is very interesting because now we are looking for the buy dip scenario. So whereas yesterday we came off of this higher move low. Okay, so it's a much different deal than the euro. So now this is critical. We have a nice, really easy support base going on here. Overall, the British pound US dollar hasn't been in a long-term bull market, monthly, weekly, and what have you. It's only been in the last month and a half that we've had this corrective move to the downside. So let's just say that this is not a corrective move to the downside. If it really is the beginning of a bear market for the pound US dollar, we are now in a corrective move to the upside for that. So it is bullish short term for if it is turning into a big bear, then short run, a correction higher for an area to sell would be a good thing to look for. Look at how they're making new highs just as we speak. If it is just a bearish correction that we've had from the beginning of June until the beginning of July, then we're looking at a big rally that's going to not only just be a correction to the upside, it's going to be a resumption of the trend to the upside. So let's look at some price targets here. So this is where we can definitely do some forecasting, at least in the short run. So let's just take the divergence argument and say that, okay, short run, even if the dollar is only bullish with some currencies and bearish with other currencies, let's say the euro is a grinding bear and continues to be so, and the pound does have this divergence and doesn't do that. Where do we look to go? Well, we're going to look at the 50% line right here, and that comes right around this high right here. So this is our first price target to the upside, especially if we can take out the high from last week. So this swing high, which was a higher move high, is critical. Above $1.3912, we're looking for a nice rally to the upside that will definitely be challenging this 139.88 area. Now above that, where can we go? Then we have to start looking at the 0.618 area, which would come in. Let's do this again. I should have zapped that in right away the first time. Okay, so the 0.618 area right around this area right here. Okay. So right around $1.4052. So let's just say, for argument's sake, that the overall market has turned. So we can look at this in both a bullish and bearish perspective to give you good rationalization for why this market should at least trend higher for the short term. Okay? So if this is just a correction off of this low and we are in the beginning of a long-term downtrend overall, where we're going to be trending lower into the fall, this would be the area we're going to run into trouble. You know, I mean, first of all, 50% and 0.618 give us our Fibonacci buffer. Then you had all this sideways trading before this downside correction or beginning of a bear trend started. So this here, where we had support right here, is going to be critical. This held up the market right here. So anything above $1.4110, that would be a big bullish sign. I think that you're going to stall before and fall short of that. So kind of come up like this. We're going to draw it, make this a little clearer. I think we're going to continue to wind our way up into this area and then start to come back at least this way before who knows which way we go. Okay, so we could end up going higher, we could end up going lower. But at the very least, I see us running out of gas here and then consolidating. However, if we get above $1.4052 and then pierce $1.4105, that's where I think you're going to have a lot of buy stops. All your weak shorts, especially as anyone that's trying to sell into this move right now, especially too early and especially in this area here, I think will accelerate the buying. Now remember, the pound does big moves like this where boom, boom, 3 days in a row, just gets slapped, and then the market whammo in one day reverses gears in a big way. When the pound kicks up its heels, it has big volatility, and you have a big range to capture. So be mindful of your risk. So be definitely leery of these levels. So if you're a bear right now, all I can say is a breach of 139.12 should set off more buy stops, and if you're short already, you're just going to have momentum in your face, because you're going to likely see a challenge of $1.3988. So if you're an aggressive bear, I could see you shorting it right now, but your stop should be right above here, because anything above there, it's going to go higher most likely. Now, bearishness, as far as that's concerned, the low from yesterday is key. Also, just below that is this upward sloping support line. So if we can take out the low from yesterday and then make a lower move low after a higher move high, then it would actually be a higher move high here, higher move low, lower move high, and then lower move low. So that would set us up for neutral at the very least, not necessarily bearish. So let's check out the hourly and see what we got here. All right, unlike the euro, this market is not in the same frame. However, what it does look like is that it keeps on making higher move highs and higher move swing lows, pretty tight, and it's holding that band. I would say for today, especially with Chairman Powell speaking, you're going to go sideways until about 1 o'clock, something like that. After that, we'll see what is said. If there's a big verbiage or anything outside of the normal expectation, perhaps we can get a shakeup. But it's most likely that this trade today is going to slow down into lunchtime, and it's going to be very boring and choppy. So if you're not already in the market and already have something going on, it's probably a good day to step on the sidelines or stay off in the side lanes until this afternoon or this evening before you get back in. So that's what we're looking at with the pound US dollar. So we have divergence once again. So the dollar index, even though that's making higher move highs and higher move lows, and that's in a bullish correction right now, at least that's what it's being viewed as, is all being driven by the euro, not the pound. So we have the euro that keeps on sagging and trending lower, whereas the pound US dollar is bullish, maybe neutral at the worst, not necessarily bearish. And then here's another thing too that you got to look at, is that just in case you don't like my other rationales for breaking out, see how we have this high and this low here? This is wedging. So a breach here would take out this downward sloping resistance, short-term buy signal. Another thing that it would also do, if you look at this, is that it would confirm that there is more strength in the pound versus the euro. And then also, if you look at this, we also have what forming here? We have this here could be a neckline, where this is a shoulder. Oops, don't need the space there. Okay, and then here is the head down here. Don't need that. And then we have another shoulder. Oops. Okay. Right there. Okay, so now that makes it a little clearer for what's going on. So you see how we have this? If this is a head and shoulders pattern right here that is emerging, then that also adds to our upside potential. Making also these key pivot points right here critical for as far as if you are a bear or a bull. So just like here, if we make this a lower move low, if we reverse gears, that puts us on neutral. If we take out this low here, which is this shoulder at 137.43, well, then we really have obviously a confirmation that weakness is in the pound. Now, this would happen, I would say, if we had a very big move in the dollar. So you know how we have divergence going on right now, where the euro is actually not rallying as much against the dollar as the pound is, and the euro is breaking more versus the dollar than the pound is because it's trending lower. It would take some sort of like big speak from Chairman Powell today to reverse gears on things to set off either a big dollar rally or a big dollar break for all the currencies to go in tandem together. At least that's the way I'm looking at it right now. So we have a good breakdown. We have a good rationale and reasoning to be bulls for the pound, at least in the short run. Like if with this head and shoulders, if you look at it, from here. This is what, 139.12 to 137.30. Okay, so that's basically not quite 2 full dollars. So let's go from 139.12 up to 141.12, or even '05. That puts us all the way up to here. So the head and shoulders on a projected bias here, if we do take out these levels and this head and shoulders neckline is taken out, that would project us above our target area, falling just around this area of critical resistance or just shy of it. And that would be perfect scenario for, if it's just a correction, this is where it would run out of gas. And if this is not a correction and the overall upward trend that we have, as you can see, this has been going up since the pandemic started in 2020, in the beginning of March of 2020, then that would be a continuation on a longer term scale. So short term, we definitely have and this is also, whether it is a correction or not, the longer term trend, the super long term trend is up. So this would be your best buying point now, as being a dip to buy if you're a bull in the long-term sense, which of course is a good buy, because let's say that this really does resume the overall long-term trend, then you're looking at not just going up to $1.41, you're looking at going above $1.42.5, going up to $1.43, $1.44 even. That's a nice move, especially if you're getting in at $1.38, $1.39 here, right here. That's a nice move to catch in the British pound and a nice trend. So you'll probably see something like this break here accelerate above here, should the trend really be there. Now, if this is just a corrective move where the dollar is still overall bullish, then the pound will be significantly, or the euro will be significantly lower, and then also the pound will start to drag as well. But then we're looking at probably not until like the beginning of August, somewhere around August 1st, maybe even in the second week of August. So kind of like this blue line here, look for it to rally up into here and then slowly come back. At least that's the view of the way it looks like right now with the charts, the way it's shaping up. All right, moving right along. U.S. dollar Swiss, this is where we, like I said, we have divergence in the European currencies. Well, the U.S. dollar Swiss has been a overall bear for months now. This has been a corrective rally that we've seen, and now for the past 2 weeks it's been sliding, but it's coming off of a lower move high in the longer term sense. So we take this high, we take this here. If this is just a bearish or bullish correction that we've had right here, then the trend should remain in place, and we're going to go lower. This downward sloping resistance should stay in place as well. However, if this is a head and shoulders here, that will also confirm that we are going to go hit support as well. So look at this. This could be a shoulder, this could be a head, this could be a shoulder. And if that is the case, see, we have our neckline here and here. We have our shoulder right there. We have our head right here. Notice how there's some similarities going on here. We have a head and shoulders pattern forming in the U.S. dollar Swiss, which would be a bear. We have a U.S. dollar reverse head and shoulders in the pound U.S. dollar, which would be bearish the dollar. So these two European currencies have an edge on the dollar in the short run. Okay, this is not a very, very long-term thing. So short run, let's say that we already have it here. We have shoulder, head, shoulder, neckline. Last week we took this out. We took out this low as well. This is also key. We made a lower move low. We've been making higher move highs and higher move lows. Then we went boom, higher move low, lower move high, lower move low. If we continue to ride the downtrend here, and this head and shoulders is real, we should see a correction down to about, we take the low, we take the high. We always go to our 50% rule because, again, in Fibonacci, it's always a good gravitational area, 0.618. Okay. All right, so that gives us those two spots. Now notice also, this here was a bearish engulfing line here. So is this one also. This was the sell signal. This head was a bearish engulfing line sell signal, and that head is still holding this correction at bay. So critical pivot right there, top of the head, which is also the top of the sell signal. And if you want to learn how to trade this sell signal, remember, read the book, High Probable Japanese Candlestick Patterns, written by yours truly. So this already has us coming down towards this initial area. It already hit the short-term target on a hourly and small daily basis. 91 even basically right here into this range is our target from this initial head sell signal. And then we have this reversal of fortune here that happened at the end of last week. And you can see that we made this lower move low. Today we are making a lower move high, and now we're coming to look at test support. We're right on the lows of the day. So if we have more follow through to the downside and we take out this support right here, that helps to go with our head and shoulders situation right here, which already pulls us down towards this area right here, and into through this Fibonacci thing. So if we go from, let's see, we have the high right here, 92.75, 91. Yeah, then we probably, with the head and shoulders, that actually dips us right below this 90.57. But it definitely puts us into this area here, which is the top of where this band here, if you look at how we're trotting along here for a month and a half, just making new lows. But basically, we were in a range from 89.33 up to 90.42, a $1 range right there. So the top of that would become a support. So that would be a good thing for, let's say, the overall trend is going to be neutral to higher for the US dollar with the Swiss in the long run. A break into this area should be nice. Find some support, and then we'll either trade sideways and chop around, or we'll make a run for new highs, especially because this downward sloping resistance line. If you look at, if we break down here into the middle of August, let's do a little paintbrush here. Let's say we start to trade down like this, we grind around, and then come middle of August, just by right here, we start to come into this downward sloping resistance line, and then once again, if we can get above it, that sets us up for the longer term. You know, if we bottom out here and make a run for resistance here, then that will mean we've had this lower move high in the longer run, and then make a higher move low, which would give us a support base. And we can kind of give you a visual on that by just putting in a pretty much 45-degree line like this. And look at where that comes into too. So this is kind of nice. Let's say that we'll put the 45 in right here. Let's say into August we come into here, and this sets a low that we start to consolidate and rally back up to where we're trading now. That would be really nice to set up a longer term expected trend for the bulls, or at least set up a good bullish scenario where you know you can put in some price points, you'll know your risk, because anything from this area and below would be bearish, and anything above it would set up for a longer term bullish trend to ride. And these are the trades that we're looking for. It's summertime, you got to be very cautious with your trading right now. Markets are thin. We got through the holiday, we got through the quarter. But it's still a crazy summer and a lot of volatility going on. So now let's move on to the US dollar, Japanese yen. Let's see if we have any questions on the chat. Sorry, guys. We got some viewers on Twitch. We got some viewers on YouTube as well. Let's see. What do we got going on here? Just checking to see if we have any chats going on here. All right, so we have some viewers. Thank you for showing up today, guys. And don't forget to like our video. If you don't want to leave a comment right now, leave one for later. We'll get to you for sure on it. And if you want to jump in right now and say something, you go right ahead. All right. So let's see what's going on with this. No. All right. So that's good. All right. So now with the US dollar, Japanese yen. This market set a nice low last week. As you can see, it's under pressure of all the ones. Think about the euro, how it's only slightly rallying versus the dollar. Japanese yen is selling off very nice. We've had a lot of volatility cooking the last couple of days here in the market. It's interesting to see how it's manifesting. This market is an overall bull. We're looking at this right now as only a downside correction. We did have this sell signal right here, which is a bearish engulfing line, sell signal that occurred a week and a half ago. The big thing was The trend that was in place was taken out. This has been holding up the base. Now we are coming off a higher move high. We would have to take out this low here to really confirm a change in trend, and I don't see that happening anytime soon. Okay, so right now this is being viewed as a corrective slide, just like this was back here in April into the end of the month of April. Now, will it be as extreme? I don't know about that, but let's just say that it is only a correction. Where are we at right now? Well, we're close to key support already. If we go by the 50% rule, we already bounced off that, and we're hovering above it again. 0.618 would probably be your extreme that you'd want to see for any real selling if this is just a correction. I would be very cautious if we get below 109.03. That could have us back trading around this 108, 107 half area. No matter what, this has been a long-term bull overall. Is it turning? I don't know about that. We have to wait and see. But now I would take where we had this supporting the trend here. I would move this to this low right here from last week. And if we do fall through this today or tomorrow, it's likely that 109.53 will be in jeopardy. So if you're a skittish long right now, or if you just got long, I would make sure that your stops are just below this low, because it's likely there are a ton there that will fuel a slide, definitely down to this 109.03 area. And as far as stopping there, I don't know about that one, because right now, remember what we're doing here is we're coming off a higher move high. We made a higher move low, okay? Now we have a lower move high in place. If we take out this low here, which is right on our target price target, that means we make a lower move low. That confirms at least a short-term neutral to bearish trend for the US dollar JPY. Now, the longer term trend, no matter what, fundamentally and technically we are a bull, but there's no reason not to see some big profit taking, because any of the long term bulls have been riding this trade for a very long time, and now it's grinding. So it's almost like they're buffering, looking for another zone, and I think the big buying will come in around 108 to 107 half. I don't really see us getting down back below 107 half anytime soon. So be mindful of this right now. We have the trade in place. We already hit the target here of 109.53. 109.03 is the extreme from this sell-off target, and also I would be just watching this trend line right here. If this is just a correction, then we'll take out this downward sloping resistance line, okay? So its market is wedging between here. Support looks like it wants to be tested, but even still, by attrition, it won't be hard for us to breach this downward sloping resistance line, keeping the short-term bear trend in place, and then pop us out for a neutral to higher trade. So be very cautious being a bear here. Know your levels. If you're short right now, I would use the high of today at 110.74 as your buffer for risk. If we get above 110.74, I mean, it's a hop, skip, and a jump before we come and make new highs on this market. And overall, I still have on a longer-term basis the U.S. dollar yen going up to around 112 half to 113 half easily. 114 even isn't out of line by November. And the way we rallied back in the spring, if we get another move like this, we'll be there just in a matter of a couple of sessions. So be mindful of that. We can look at the hourly to see where we're going. Here's another one. We're short run on the hourly. We had been trending higher. It does look like we want to hit support, obviously. Higher move high into higher move low. Let's use this as a critical pivot right here. So if you go look at the hourly, 110.19, this is your big spot above here. We become choppy and neutral. Below here, we're looking for a test down to 109.80. I think that's about the extreme, especially if it's just a correction. If it is a bearish thing in place, well, then this is the very beginning of a sell rally forecast on the hourly, but right now it doesn't paint that picture totally. So we'll see. We have to get below this upward sloping support line. Once we do that, then the daily and the hourly confirms that bearish momentum is definitely kicking up its heels. And then at least on a short run for an intraday play, you're looking at a good chance of selling it below that line and catching a nice move somewhere into this pocket right here. Once again, this is going to be a key area of support. If we fail from there, It's not the end of the world, but it's very likely that this is where support is going to come and jump in for this market. Now let's look at the Australian dollar, US dollar. So I don't know if any of you guys are Aussie traders out there on Twitch or YouTube here or whatever on our chat. Let us know, because this is a good market. I would like you to ask some questions, or if you have any, it would be great. This market's been a bull versus the dollar in the long term for a while. The only thing is that it is no longer there. Okay, so if you look at, we bottomed out in March of 2020 when the pandemic began. Since then, it has been rallying and rallying and rallying. However, we did take out the trend line, keeping this market intact. So by attrition, this was a very steep rally. Okay, now you would think that if you look at this long-term downtrend that it had been in, that, wow, this is getting bullish. Well, I would use caution with that one, because if you look at this, you're going to have a whole new picture. So you go back to 2011, Australian dollar has been in a bear market versus the dollar. The pandemic just gave the biggest correction this market's had in years to the upside. And that's really what it is if you really look at the long term on a multi-year scale, this market's in a bear trend. It made a lower move low, and then here it still failed to make a higher move high. We fell short months ago at 81.46. This is key. Downward sloping resistance on a super long-term scale coming in. We fell short of it. We failed to make a higher move high right here. This is a key level right now, the high that's in place on the over the past few months. Anything above here, well, that changes the super long-term target of things, doesn't it? It would take us out of a multi-year, over 10-year trade to the downside. However, if this is just the end of a bullish correction, now we're looking at the beginning of a downward trend that's going to have this market back down at least to the 65 area. So let's just say that the bear trend does come back. The overall super bear trend is here. And we have every reason to believe that it is, because of what's going on politically and economically with Australia. They are in a world of hurt. Versus all currencies, the Australian dollar is a bear. We're going to look at a couple other ones too. But fundamentally, because of China cutting off their buying from Australia, puts a stranglehold on them. China putting higher tariffs on the goods, and especially the raw commodities that they purchase from them, also puts a stranglehold on Australia. China lacking its reserves, because it's been stockpiling iron ore and copper and all kinds of raw commodities for the past decade or so. They are now selling that off to their companies to lock in a price fix for the cost of goods to try and curb inflation. Well, in the short run that may work, but that doesn't work overall with the global markets, and it's definitely hurting Australia. So as long as China keeps these new imposed tariffs at the levels they are, keeps the decrease in demand for the goods and also commodities coming out of Australia, the Aussies are in a world of hurt. And then with their lockdowns that are continuing right now, and the new wave and new lockdowns, that's another thing that has their economy in jeopardy. So we're going to have divergence, just how we had divergence with the euro and the pound, where the euro is in a bear trend versus the dollar, the pound not necessarily. The Aussie is definitely in a bear trend versus everything. I mean everything. So here's the monthly scale. We can see how that is and how that's shaping up here. Let's get back to the daily here. So the daily, obviously, we have a bear trend in place. And we're going to keep this outlook also. We are coming off of lower move lows from last week. We're going sideways, but the main thing is, it's like here. We bounced up, made a lower move high, and then boom, we fell back on support. Are we going to just slam new lows in this market? Probably not. I think it's going to be a grind. It's a sell rally forecast. I would be mindful of being a buyer here. If you are long, keep your stops tight. Know your risk, because it's very likely that sooner than later, and more likely with more momentum, you're going to have sell-offs than you will have rallies. These are the kind of rallies you're going to have more grinds like this, very few up days like this, but you will have more consecutive down days with decent volumes to the downside. So that being said, Australian dollar is a bear. We're looking for a turn back to support. If you can get back above the high from yesterday, then that would have us on a short-term little situation where I would say it's a rally to sell. Look at the hourly basis. This is kind of choppy. Coming into this low that we're coming off of, if it's so bullish, here's the lower move high, higher move low, lower move high, lower move low. That's very neutral to choppy. Now we're coming off of, okay, let's say that this was a lower move high, and then this wave here will be a higher move low, and now we have a higher move high. That's really reaching. It's really, really reaching, and it doesn't really give us much of a reason to think that this is going to be sustainable, especially if you look at the consolidation of trading at this level where it's trading at now and just above it. I see that resistance most likely is going to curb things and send us back down. So I would be very cautious being a bull here. If anything, I would look for a rally to sell. And especially if you see a turn of events on the hourly, it's most likely going to creep back into the daily. The low from yesterday is also critical. So we'll use yesterday's trading range as our breakout points. So if you want a sense of direction, at least in the short run, watch for a breakout above 75.03. Above here, we're looking for a challenge up to probably around 75.5 to 75.75. If we take out the low from yesterday at 74.25, look out below. I don't think we're going to slam down to 72 even anytime soon, but for us to get down to pressure below 74 even, down to say 73.85, 73.75, that could very easily happen, and then spike, and then go neutral and chop around. So for you aggressive sellers and swing traders, look for rallies to sell into, and I would look for breaks to take profits. And I would be getting out of shorts as we make new lows and not getting long. That's the perspective I would look for the Aussie. And if you look at the Australian dollar versus say the British pound, there you go. It's a bear. Australian dollar versus the euro, it's a bear. It's a bear. Australian dollar versus the JPY, even that, it's a bear. They're all in a corrective state. Every currency versus the Australian dollar, like for instance, the Australian dollar versus all the major currencies is not just in a correction now. Maybe with the US dollar you can say that, but with all the other currencies out there, it's in a big bear market. Australian dollar versus the Canadian dollar. This is one that's kind of stabilized over the past few months, but even that, it's riding its lows. So you're going to say the one currency, the Australia dollar, has a bull against is Canada? Yeah, I don't know. That's reaching. It's really reaching. So Australian dollar, US dollar, as you can see, especially as the dollar remains strong against the euro. If the dollar is strong versus the euro and the euro is strong versus the Australian dollar, how's the Aussie going to be strong versus the dollar? It doesn't work. It doesn't add up. If the dollar is strong versus the pound and the pound is strong versus the Australian dollar, how is the Australian dollar going to be strong versus the US dollar? It's not going to happen. So I always tell people the best indicators of the market is the markets themselves. Use that guidance. So if you're an Aussie trader and no matter what cross you're looking at, look for rallies to sell, look for bearishness in the Australian dollar. The only thing now that would turn that around is if all of a sudden China comes out and says, we are reducing tariffs on Australian commodities and goods. That would be a big boost that would give short-term buying momentum for Australian dollar versus all currencies. If China all of a sudden says we are going to lock up our stockpiles and we are now going to start importing more commodities and goods from Australia, then that would put a big spike, and then the only thing else that could give a lift to it would be if you had a severely crashing U.S. dollar. Severely crashing U.S. dollar, then you might get a nice upside correction back to the Australian dollar in that cross. But then that wouldn't mean necessarily that it would be strong versus the other currencies. So if you're an Aussie pound trader, an Aussie Swiss trader, Aussie yen trader, keep that trend in mind, most likely. Now, there's fundamentals between those different countries and dynamics that we could get into as well. But we look at the major currencies, how they dictate the movements in the overall sense, and then you can break down the micro for your little nuances. And definitely, if you have any questions, put it on the chat here on Twitch or YouTube. All right, now, Australian dollar. Let's look at Australian dollar versus New Zealand dollar. This is key. Look at this. This is huge. Do you see what's going on here, folks? Australian dollar versus New Zealand dollar is tanking in a big way. This is huge as far as what I said about Australian dollar strength. And also divergence. Remember how I said like the euro is weak versus the dollar, but not like the pound is? Australian dollar is very weak versus the dollar, and here is our segue into New Zealand dollar, US dollar. Look at that rally, folks. Now, we had a double bottom in the New Zealand dollar versus the dollar last week. Then we started to fall back. Yesterday we made a slightly lower move low, so it's almost like a triple bottom. But if we taking out this double bottom, there was no sell stops, there was no momentum. Boom, like a balloon underwater, we're escalating this rally in a big way. Look at how the New Zealand dollar is up against the dollar. Remember when we looked at the euro US dollar? It's only up a little bit. It's 50% of the range back from yesterday's range. That's it, right? Look at the British pound US dollar. This one almost has recaptured the range, but this one is also, like I said, is the stronger market than the euro. New Zealand dollar, US dollar, took out the whole range of yesterday's body and its high coming off of the low. Boom. That is right here. If this closes where it's at right now, this is a bullish engulfing line buy signal. Unlike the Australian dollar, where I would not look to buy that market, short run, this is a good signal. On the hourly, boom, here we planted that low, escalating here, lower move high, higher move low, higher move high, higher move low, higher move high. Watch this key pivot right here off on the hourly at 69.84. A failure from there would show weakness, but unless we fall below, I would say this one here at 69.39, this market is getting ready to trend higher, or at least stay neutral to higher versus the dollar, okay? So on a daily basis, that sets up the low of today and partially here, mid-range here. These are two key pivots. If we fall below, once again, this lower one, that would have us riding support, but not necessarily trending much lower. It's just going to prod the lows versus the Australian, which is just tanking. Now, also notice how we had the Australian dollar and New Zealand dollar. New Zealand dollar is so strong. Now, it is one of the bigger currency crosses in the globe, but it is the smaller one of the biggest ones. It has the biggest range today. This is huge to be mindful of as far as dollar strength and dollar weakness, divergence of currencies around the world. So remember how we started off this webinar with the dollar index, meaning that it's a reflection mostly of what the euro is doing, because the second biggest component is not doing the same as what the euro is. It's not going in tandem completely with the euro. It's actually diverging, meaning that the pound is gaining strength. The pound is gaining strength versus the euro. The euro is losing strength to the pound and the US dollar. Hence, that one is continuing to make new lows, whereas the pound is at least in a short-term upside correction, if not regaining the longer-term trend to the upside. So those, while the euro is going down, pound's going up. Remember Brexit? We haven't talked about Brexit in a while because it's post-Brexit, right? We talked about Brexit for almost 4 years, and especially the last year and a half of it, it seemed like it was never going to come to a close. We're in post-Brexit, folks. No one's even talking about post-Brexit anymore. UK is on its own. It has its own sovereignty. That's where we have the divergence. It has finally hit the markets. Remember, last year we had the pandemic. Pandemic trade's over, folks. It's still going to influence the markets, but it is over. It's been over for a while, and the markets know it. Now they're concerned about the real numbers, because pandemic or no pandemic, we can stay in a pandemic for the next 10 years. It's a part of life. Just like the numbers are a part of life. So now we have to get back to the numbers that dictate market movements. The inflation numbers are there. Chairman Powell is speaking today. They're trying to cover it up, saying it's not. They're going to sugarcoat it, saying don't worry about it. It's a short-term blip. We're going to go back to normal. Everything's going to be fine and rosy. Yeah, good luck with that fairy tale. You know, the world is not in that place. So be mindful of this trade. Now let's look at the U.S. dollar Canada before we hit the cryptocurrencies. Here's where dollar weakness is definitely going to most likely prevail. This has been in a if you look at the weekly, this thing's been trending lower for a long time. This goes all the way back to March of 2020. Now it looks kind of like this market wants to come out of this trend. So did we bottom? Are we in the beginning of a big turn of events? Well, could be. I don't think so, though. I think what you're seeing right now is still a bullish correction. We haven't taken out this high. If we take out this high, it still doesn't get me overly bullish because of the politics going on between the U.S. and Canada. So by attrition, this is where we had the G7. It was coming up into this thinking, oh, we're going to have some relief and U.S. and Canada are going to get along in the energy trade and blah, 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 and a whole bunch of other economic and fundamental factors. Well, the technical is showing that they didn't resolve anything and it's not there. So we are making higher move highs and higher move lows, but this looks like it's running out of gas. After this high here, we did have a sell signal. The second day here is a bearish engulfing line. It is a counter trend trade for the past week and a half, or past month and a half, if you will. But on the longer term scale, on the multi-month and multi-week, this fits the trend, which is lower. This is a trend trade because right now the overall longer term trend is bearish, so this is going with it. So just like we had a sell signal here and it came down into this area, this one is also making its way. Now here's something you want to be mindful of is we made this higher move high, we made this higher move low here, which is where our sell signal is, right? What happened? Lower move high, and today we made a lower move low. Now we're lower on the day, but we're just below the highs. This is chopping around, but this is key. It shows that if we start to play with support anymore here at $1.2438, odds are very, very good that we are going down, baby. We're going down. So now we're going to go down in the big way. I don't know. I think what you're most likely going to see is this snake along and chop around. We may even have a potential head and shoulders going on here. If you look at this, this could be a shoulder. And one key thing to note is if you read the book High Probable Japanese Candlestick Patterns is that a lot of these patterns come in right at, say, like near the high, especially of a head and shoulder, or the low of a reverse head and shoulder. Other classical bar charting, longer term patterns that take days and weeks to emerge when only a 1 or 2 or 3 day pattern for the Japanese candlestick patterns emerges simultaneously, they end up playing off of each other. So if this is a head, then we would assume that somewhere around here we are going to chop around, whatever, do whatever, and then go down. And that would be if the head and shoulders is going to come into play. Okay, so you could see a head, bobble around, make a shoulder, and then boom. So support would be following this area right here. Okay, so we have this holding up the trend here, and this is something you have to be mindful of. If you look at the longer term trend, it's not too steep, but by attrition, we're going to come either through this upward sloping support line, which doesn't make us bearish if we just go sideways through it. But look at how we broke here. If we all of a sudden fall apart, say after the Fed meeting today, and trade in tomorrow, and we start to come back on these lows and take out this upward sloping support line, well, then we're coming down to this one, which becomes very key. And I would assume that we're most likely going to find a little support here, bobble around, chop around this area here, and then boom, then we're going to start to really fall apart. Just to give a little time for another shoulder to emerge, I doubt that this little break to here and rally to here sets up another shoulder, but it could be. And I would say that if you are an aggressive bear, that here's your line in the sand, use the high from yesterday. Actually, use the high right here. Use 125.58 as your risk. Anything below there for an aggressive bear, I think you're setting up for this move to the downside. If you get above here, then that's where we run into trouble because it cancels a whole bunch of things. If we get above this high here at 125.96, this old high from this previous swing high, obviously a rally above here would confirm a higher move high after a higher move low, which means we're in a bull trend. So locking that in place. So be mindful of that. But I think if you want a low risk sell right now, especially since the sell signal is still in place, We are in this area. I mean, the risk right now, you're at 125.08. So you're looking at just under a full buck of risk here, but your downside target here, this is where it gets good. So let's just say that this is a head and shoulder on a big scheme, bigger wave. So that has us coming down for sure into the Fibonacci area. This is the minimal target anyhow off this sell signal here is $1.2298. So right there you're looking at $1.2298, so figure $1.23 even. You're looking at over $2 right there. You're risking a buck for $2 of reward. Minimal. That's at the minimal target right here. And if we come down to this level, this is a good sell target to find support if this wasn't a head and shoulders pattern. If this does become a head and shoulders pattern and this sell signal helps to generate this, then you're looking at $1.2227 becoming a viable target, and even lower. That's when the trend is the overall trend. If this is a reverse head and shoulders setup, we could be back down to 121 even testing these lows near $1.20. Now this would take a much longer time period. Then you're looking at trading out into September. So should the big bear for the US dollar Canada arise, and here's the thing you have to be mindful of. The oil trade has helped to drive this trade. We're trading at $75 a barrel right now, and we haven't talked about oil with the other currencies, but we have for months. That trade is pretty much off the table. But not for Canada, and especially because that has a lot to do with the politics. If oil continues to surge, and especially we have a $100 price target, we hit our $75 price target, which go back to our old videos going all the way back to December and January. I've been calling for this, with the new administration. They confirmed it on January 20th, setting it in motion. We're going to $100. 75 was hit. That dictates a lot of trend, a momentum for the Canada, the yen, the pound, the Aussie, and a few other currencies globally. Also the dollar. Now, because we have this turmoil politically with Canada, that means that unless we have a change in tune out of the White House and also the Canadian administration, I'm not getting political on either side, who's right, who's wrong. All I'm saying is they can't get along. I do not understand what is going on right now between our two countries, because usually we don't have this tit for tat with Canada. So this is all a whole new dimension, especially because it seems like they're on the same page with everything else, but for some reason, as far as U.S.-Canadian relations and trade and what have you, we're so off page, it's not even funny, so be mindful of that. If we do get above these highs at 125.96, not really looking for much more to the upside. Once again, we are bearish in our outlook. Looking for a rally to sell. We like this low risk area right here, and we're looking for the longer term slide. So we'll see what happens with that. Now let's get to the cryptocurrencies. I know you want to get into them. What is there to say? Same thing we've been saying for days now. It is just a choppy range trade. We're waiting for a breakout. I mean, the reality is look at this. When has the crypto market been so tight? It's almost like when we fell off the $20,000 highs years ago, back to the lower $2,000, $3,000 area, and we went sideways. So the question is, are we basing, or are we getting ready to fall apart again? I think that because of all the news in the crypto space and that's happened recently, that's put a stall on things. I think that you're running into a lot of people that are up a little bit. They're taking profits as soon as we get into this $36,000 to $40,000 range. Their expectations on longer term holdings of Bitcoin, for instance, seems to be diminishing. But then there's also a lot of interest coming in, obviously, in the lower 30,000 area. If we fall back into the upper 20,000, like around 28,000, I think it's very likely that we could get back down to like 24,000. And you know what? It wouldn't be that crazy. I mean, where resistance was before, it becomes support. So I think that even if we touch back down to 20,000, that wouldn't be the end of the world. I mean, let's just go back to here and here. And let's put in our 50% would come in right there, which is already right where this is, okay, from that other one that we just did. And then if we look at our 0.618, yeah, that comes a little bit lower lows, but very easy to find support where we're at right now on this super long term. So, and the thing is, it's been making higher move highs and higher move lows. We haven't established a true bear trend. Right now, we're in a bearish correction. Remember this? Remember this run up here? Look at what happened. This was December 1st, or December of 17. We dawdled along, didn't break out until November of 2020. Look at that. 3 years where we bobbled between 20,000, got down to around 2,600. So that's a big correction. It's a 90% correction. We haven't even had a 90% correction off of the 64,000, you know. So are we going to do that? Probably not. I don't think so. But look at the steepness of this trend. Remember, if you listen to our videos or have been around for a while following Forex Trading Unlocked, you know that one of our big expressions is markets go out like they come in. Look at the velocity of this rally. It was insane. That's why, look at this. It had a big velocity, came down, and then it had to stabilize. And then it grounded down and was in a little bit of a bear trend. Then it started to grind back up, had a big strength, and then we chop, 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 chop. So that's pretty much where we're at right now. We had this accelerated rally. Now we're having an accelerated decline. There's a lot of support in this area. So now, because it's not that much, there's a lot of faith. The more faith we have, the less likely we are to come back to 20,000. But for us to drift for, say, the next 6 to 8 months, I mean, we could very easily go from where we're at with this high that was in April of 2021 and go all the way to, let's go to April of 2022. Look at this. Would it be crazy for us to go sideways in Bitcoin for this amount of time? No. That would be the same thing that happened here. It would also be the same thing that happened here, or all this. So the market trends only 30% of the time for most markets. 70% of the times it's consolidating and just going nowhere. So we've already seen, just in these pops right here, big accelerated rally, big rally here. This went from March of 2020 until April of 2021. You're looking at 13 months, which that's another one. That's a fib level. So that right there on a timing basis, 13-month rally, boom, sets us up for the correction. And now sideways for the next, could be upwards of a year. Now, does that mean it's going to happen? No, anything can happen. We don't know. But to make newer move lows, we got to take out 28.8. So yeah, right around 28,000, which is my magic number. Below there, I have us definitely coming down, chopping around, setting a new consolidation here, and then looking to set a new bottom. Remember, we had a higher move high, higher move low, and then we had a lower move high, higher move low, broke out. So longer term, higher move low, lower move high, way higher move high. We're looking to set a higher move low. You know, if the long-term trend is bullish, which, you know, everybody's saying Bitcoin's going to 1 million, who knows? We'll see. So Bitcoin, that's a reason for sideways and a reason for you to be very cautious as far as looking for long-term outlook. You may be looking at Bitcoin going sideways for a while. Not so much for the other ones, though. And they may help to get Bitcoin moving. Ether coin, we love Ether. We love the technology. It's got a lot of interest with a lot of offshoots. This one here, it's been grinding sideways just like Bitcoin. A little bit more action. I think you have a good chance at breaking out to the upside here. Could we ride support? Absolutely. Obviously, longer term, intermediate term from May down till now, we're in a bearish trend, but now we're consolidating. Short run over the past month and a half. We're coming off of a lower move low, lower move high, higher move low, lower move high, and then boom, we made a lower move low. Or is this the lower move high and this is a higher move low? So I would key off of the low that was set back in June. This is the base. Anything below 1700 has us very bearish. Everything above it has us looking to come out of this slide. The trend here, if you look at this, downward sloping resistance, we're nearing that as far as this trend right here. And this trend right here, well, look at this. We're ready for a breakout, folks. Seriously, going from the high set back in May to the lower move high right here. If this is a bear market, we're going to stick somewhere between these two downward sloping resistance lines. If we don't, then we're looking for an upside breakout for sure, because the buying momentum will be there. You're going to take out the intermediate monthly multi-week trend, multi-week trend on daily trend, and then also here the more short-term daily trend and intermediate weekly trend being taken out as well. So expect a big flurry of buying above 24,000 here. So 17 to 24 could be a range trade. I would key off of the low from today, because anything lower than that starts to put us back down towards these lows here. Use this as our pivot. Anything above here, we're looking to go sideways to higher, and a breakout of 24 definitely has us targeting higher levels. How far? I would be cautious. I wouldn't expect us to rally all the way up to 4,200 anytime soon. But for us to get to a value of somewhere between 2,500 and 3,000 for Ethereum, that I think is very likely over the course of the next, I would say, month and a half. You know, so if you look at it kind of like going like in this kind of a capacity, like that. That's the way I see. Oops, don't need that. Oops, don't need that. Okay, there we go. There we go. All right. Sorry about that, guys. Having a little trouble with the... There we go. And then here, we'll put this right there. Okay. So, like I said, chopping around through here, I'll slowly grind through this downward sloping resistance line, come through here, and then start to edge our way up. And then by, I would say, August 1st, somewhere between that and the middle of August, get a breakout to the upside here. And then this is where I think you're going to see a pause. Somewhere around this area here. This will start to consolidate again, you know. And then if we can get above 2,900, well, then that's a different story. Now, why do I say between 2,400 and 2,900 being where it stalls? It's fair valuation of technology. The more technology gets increases in price, the less enticing it is to use it, no matter how good it is. So whereas if you look at these cryptocurrencies as a store of asset and a potential, you know, that's a different story. But if you look at the premise of what they are and their technologies, there's a value in those technologies, but there's also a cost. So the demand for the technology goes down as the costs go higher. Now, because these increasing costs with Ethereum, you're getting these offshoots, which is offering all kinds of opportunities as far as the payment structures and all kinds of data movement and blah, 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 where this is not a show about the technology, but it is being embraced, and there's all kinds of offshoots that are being utilized. As long as Ethereum doesn't go up to like 100,000 or 200,000 or 400,000, these other things have a very good viable option of becoming mainstream. However, if you're just looking at these things to continually always appreciate as an asset and be a store of wealth, as the cost of using these systems goes up, there's always a demand then for something else to pop up, meaning that the technology will implode on its own because of its own greed. So if you keep the prices in check, there's a store as a store of value, then they're starting to get tighter. And maybe that's what's happening with the cryptocurrency markets, is that Bitcoin is like the dollar index, if you will, and it's a basket of all kinds of different altcoins out there and technologies. So whereas it doesn't necessarily dictate for any given one, but as there's more of these out there, it starts to spread out liquidity for one, and it also starts to decrease volatility as another, meaning that instead of having these wide spreads and huge ranges in Bitcoin every day, they start to tighten up because you have fluctuations in all these others. And as they spread out and they start to become more liquid, everything tightens up and they become more reflective of major markets. So for those of you that's been trading, say, equities and options and futures and Forex stuff for years, you understand what I'm talking about when it comes to that. Remember, the crypto space is still in its infancy stages. XMR Monero, here's another reason why I do like the technology, and I like this one as well. this is another reason where you look at Bitcoin and the argument that maybe we have consolidation, not because of lack of interest and lack of buying or selling, but because the technologies, as they start to become more mainstream. Remember, now we have multiple payments, like even Visa, I think, is now you're going to do something with cryptocurrencies accepting that. Charities, we just had it on the news locally in Chicagoland how one of their new charities are accepting cryptocurrencies, and they're starting to take their first payments. Now, the one thing is that someone gives them a payment in Ether coin or Bitcoin for, say, $35 or $50, whatever, of the dollar value. These charities are not keeping the cryptocurrencies as investments, so they are rolling it instantly into converting them to cash. But that's where these things start to become tighter, because now you have people who are holding crypto, investing in crypto, earning interest on crypto, and then spending crypto, but the people who they spend it to are converting it to cash right away. Because one, they need it for other payments. They could possibly pay in crypto, I guess, for certain things in the future where they could transfer it. But there's too much volatility. So as far as accepting, like, think about this. A charity rolls a crypto into cash right away. Well, a charity is not meant to be investing. Sometimes they have enough funds where they do put it aside to gain income and what have you with certain types of investments. But as a whole, they're not meant to be investment vehicles, because then they're not being a charity. They're just becoming an investment vehicle that money doesn't go out. So that's why you have those conversions. So that will also keep the tight in the market. Monero also has a technology that's very embraceable and mainstream, or becoming mainstream, just like Ripple and a couple other ones. So these are ones that they could be basing. I don't think you have much downside risk to them. If anything, I think you have more of an upside potential. But just like Ethereum, do I see it going up to 520 and its highs anytime soon? Probably not. Do I find value in it going up towards 400, between $280 and $400? Absolutely. As far as this technology, I think there's room for it to do that. It could still get above 500, just like Ethereum could go higher. But if you get Monero, say, up to $20,000, $40,000, $60,000, where Bitcoin was, then I see it becoming a problem as far as whether or not it's just going to be maintained. So this pricing, there is upside potential for all of these, but you have to be rational in your approach. It's kind of like the bond market, where the equity markets, there is no, in theory, ceiling to anything. With the bond market, there is an ultimate 0 point, and there's an ultimate floor, and there's an ultimate cap, no matter what, as far as pricing. They cannot, electronically, you could say they can go over, but just in theory, in reality, in payout, they just cannot go there. So there is a range that they are sustained in. When it comes to technology will be replaced when other technology becomes either obsolete or it becomes too expensive. Why does new technology come about? Because of reduction of costs, or making things faster, easier, and better. The whole definition and premise of technology is to make things faster, better, cheaper, and etc. Anything that goes against that model gives you the red flags that eventually you're going to have a problem. So Monero, looking for a bounce. This is like Bitcoin right now. I think that there's just not much interest in this one speculatively. But as far as it going lower, I don't see it really getting pounded unless the whole sector as a whole gets a sell-off. Otherwise, we're looking for it to be a bull. Now let's go to the Doji. Everybody wants to know what everybody thinks about Dogecoin. Well, we've never been very up on the Doge, but it could be coming out and ready for a breakout to the upside, or it could just be going out lower. I think you have to be very mindful of the support levels. If we can get above 29 cents, fresh buying, I think 30 cents seems to be the big area of buying and support, and also where people they're not willing to jump in afterwards. So we'll see what happens with this. We need a rally above 28 cents. That would confirm short-term strength. I would use caution with this one and be mindful of the fact that once it gets to around these highs here, 44 cents, you're going to have a lot of selling. Could we go up and make new highs? Absolutely. Anything could happen with any market. Are we going to do so? Very unlikely. The only reason I see any fuel to the fire with Dogecoin making new highs, let alone getting above $1 or $2, and it could easily go to $100. That would be because of synthetic buying, meaning that it's all just on not just faith, it's just marketed. Remember, cryptocurrencies aren't regulated. What stock advertises you to invest in them? None. There's not. Coca-Cola has commercials every day on TV, radio, billboards, whatever. Not one of them says buy Coca-Cola stock. It's a good investment for you. We pay a good dividend. Whatever. They don't. First of all, it's illegal. Number two, and there's a reason for that. Regulated markets, you cannot promote things and market things like that. So the fact that Dogecoin now has billboards and advertising all over the internet, I've even seen pop-ups and whatever, buy Dogecoin, invest in Dogecoin. I don't know who's pumping it. It's not just advertising crypto space. It's trying to pump and dump this thing. The technology, once again, we talk about technology always when we make reference to these. It's always to remind you about there's a technical and fundamental side to these markets, just like other markets are, like the Forex markets that we talked about earlier. This technology, what's it worth? Let's just say that even the young kids want to embrace it. Let's say they're not just looking for the investment, but they're like, no, you know what? I believe in the Doge, not just in making me a billionaire one day, but the technology is we're going to ride this technology into the future. Nothing lasts forever with technology, that's for sure, and this technology doesn't look very embraceable. That's the biggest flaw that there is with Dogecoin, that you can put a pep rally all you want about people using this technology in the future and it being embraced mainstream all over the world and in a big way. Not going to happen. I mean, anything could happen. I could be totally proven wrong, but from everything I've researched, everyone I've talked to, and I've been working with people in the crypto space for years, like I still take the Levi Strauss approach. I'm more into the picks and the axes than I am the actual currencies. However, I am long all of these. I am long Doge, I am long Ethereum, I am long Bitcoin. I own about, now what is it, about 17, 18 different coins out there, at least a little bit. And I get it through payments, and it's been earned. I've never bought any cryptocurrencies, but I do own them. And my whole view, especially with like something like Doge, my payments came in and they were at the 40-cent level, down to 35-cent level. So I'm definitely hoping that 30-cent buy-in train comes back in, because as soon as we get above 40 cents where I can average out, I'm taking my money so I have the payment. So that's where I'm looking at. I don't know if other people are looking at it in that same way. I don't have any major stake, but I do know there's a lot of people that mortgaged their houses and took out equity loans and bought a lot of Dogecoin, and they own it all from 40 cents on up to 70 cents. There's also a lot of people that own it below, but those are the creators, the miners, and that where they have it at a very minuscule cost. So for them, it's no big deal, I mean, like, even I'm like going to liquidate most of it, whatever little profit. I'm going to take my expected profit from what I earned from those goods and services. Once that is out, whatever's left in the Dogecoin, I'll leave it there. And then if it goes to zero, I don't care. I don't lose anything. And then God forbid it explodes. Well, obviously I won't have as much as I would if I didn't get out of it. But like I said, I don't have faith in this technology. All right, so no questions on the chat today. You guys are quiet on Twitch and on YouTube. Like the likes, though. Thank you very much for that. Make sure that if you guys don't want to just feel shy, whatever, you can always go back on the video and leave a comment. Before we get off this, I want to show you something really quick. Just be mindful of what's going on since it's Fed speak. Remember, the futures, the currencies we've been looking at and the cryptocurrencies are live, but there's a slight delay. If you go on our website and you go to the markets and you go down under futures, you can pull up our futures things. And I also have the 30-year here. Now the 30-year is acting really skittish because of the inflation numbers that came out yesterday. Chairman Powell is speaking right now, and we're trading about 162 even. If this market falls back on its lows on the daily basis today or tomorrow, that is going to give a lift to the U.S. dollar. So where we've been looking at, and that's another thing that's suppressing the cryptocurrencies, is the dollar is kind of a bull right now. It's really hard to be. I know that the world hates the dollar, and there's so many people that do, but the more people that hate it, the more it seems to grind. Now, we started this webinar an hour and 18 minutes ago. Thank you guys for all hanging on as long as you have. The euro is still below its highs, but it hasn't really moved. Remember, until Powell is done speaking today around 1:15, 2 o'clock, and then the bonds closed, well, in theory, obviously not electronically, but that's when the rollover date is. We're probably not going to see much action. But if we do, and especially tomorrow we have unemployment claims, I'm just telling you, the boat's already been rocked, and I know it's not because it got bumped into, it's because the waves coming in against the boat are very high, and they're getting higher. So if these continue to rock the boat, then this euro-dollar rally, we're going to go one quick lap around the world. So just like we looked at the Treasury bond futures here, if this market makes new lows, in fact, we'll even go back to, we'll look at the 10-year, because a lot of you aren't familiar with the Treasury bonds, so we'll look at the 10-year note. 10-year note, same basis. This has been a little not quite as extreme, but if you look at the daily basis, this is where it was yesterday. It continued lower. Today it's a little bit higher. The lows of yesterday in the 10-year and the 30-year note, if those get taken out today or tomorrow, especially into Friday off of these numbers, look out below for the rates, meaning rates go higher, interest bonds go down. US dollar most likely would go up. So this little rally you see here is going to fall apart, and we're going to see new lows in the euro US dollar. Very likely if those interest rates get hit. Okay, British pound US dollar, same thing. This one was trying to maintain its bullish posture. Now we are overall a bull here, so we're looking for this one to continue to peter up and pressure resistance, then maybe pull back a little bit. Unless there's a big rally in the dollar and a huge sell-off in bonds, this will probably maintain its posture and then go higher. Remember, we have the divergence. Be mindful of that. Euro US dollar is in a bear trend right now. We're looking for it to make lower move lows again, especially if the bonds get hit. If the bonds get hit, not necessarily going to hit the pound US dollar so much. US dollar CHF, here's another thing. And this falls in line with our analysis too, is that if the bonds get hit and 10-year get hit and make new lows that strong the dollar, okay, then that's going to reverse gears here and bring us back and make new highs. If not, well, then we'll maintain our trend lower. This is a little bit more neutral of a trade. The euro and the pound are the more extreme ones. We're not looking for any major moves for this one, but the interest rates will help to direct that one as well. Then we have the US dollar JPY. This one here, especially if the rates go higher and the bonds tank, then this scenario here was coming down into here, reverses gears. We take out this high and start ranking. Remember I said, you got to key off of today's high. It's very critical. If we turn around today or tomorrow off of those unemployment numbers, and if we make a higher move high, that makes this a higher move low, boom, the bull is back, baby, and we're going to be challenging 111.70 in a heartbeat. That could even be hit by Friday. No lie. That could be very accelerated. Australian dollar, US dollar, remember, Aussie versus all currency crosses is a bear. It is under pressure. We went through all the review of Aussie versus different currencies, pulled up those charts. Very obvious that this trend is in place. Aussie is right now in, sorry to say, they're in a rock, not just in a rock and a hard place, they are in trouble right now. And hopefully things get resolved and smoothed out. Don't wish what's going on with Australia, wouldn't wish on any country. It's also a sign of things to come, because if this does not change for the better for Australia, it doesn't bode well for the world. There's a lot of stuff going on with the China Sea and China kicking up its heels. They've got a stranglehold on Australia. This could really impact the markets, not just for the next 3 to 6 months, but for the next 3 years. We're looking at, with the way things are setting up, especially with a currency shift like this, with one major currency being completely leveled off into a bear mode because of these things, and it will only be accelerated if we do not start to see amicable changes. And then, God forbid, we have any type of spike with COVID variants or whatever. Like, do I see us going into lockdowns again? I certainly hope not globally. But if we do start to see a spike, especially as we end the third quarter this fall, odds are that you're going to see some big, big volatility. And Australian dollar, I'm telling you, this is a long-term short, so we'd been skipping along on this one. We took some profits on it. I wish I would have been paying more attention to the political stuff. I was shocked when China did what they did a week and a half ago, because that's where it really locked in the trade. So I'm looking for rallies to sell. It's a tough one, and when it comes to even the other currencies, now I'm trading the Aussie crosses because there's some good volatility, there's some good swings. So I would definitely be mindful of them. Remember that there's a lot of action here. There's just a ton of action going on with Australian dollars. So if you're not normally an Aussie trader, I would look for your opportunities. Remember, there's always an opportunity somewhere. Remember the Australian dollar versus the British pound. Look at this. We got a nice trade here. We get a rally to sell, just like we're looking for with the U.S. dollar, unless we have some big political changes, you know. And remember the Australian dollar versus the New Zealand dollar. Look at that divergence. You know, the New Zealand dollar is totally strong today, and the Australian dollar is only slightly strong, but it's getting crushed with the New Zealand dollar. That's crazy. So these are trades to look for. Like, once again, New Zealand dollar, remember how we said even that is going to maintain a posture of neutral to strength versus the Aussie? Look for rallies to sell. That's what we're looking for. That's what our main trend is going to be for the next couple months. And now remember, the reason you trade currencies, most markets trend 30% of the time, 70% of the time they're going nowhere. The opposite is for currencies. Now, not cryptocurrencies. Cryptocurrencies act like regular stocks and whatever because they have that normal mental retail buy only, buy and hold mentality. That's why these markets behave the way they do. The reason currencies trend is because just like interest rates trend, especially in the long term, and they do more than 30% of the time, is because the trader is different. You're looking at the very core economics of things. You're not going on the macro level. You're looking at the micro level, and it's not just under a microscope. It's just putting things into the very cut and dried factors. There's only so much you have to watch, and when these variables start to go into play, you just know how to react. There's just a fundamental reality. It's not like 2 + 2 = 4 always, but for the most part, you know that when you have inflections of interest rates, and especially which are a function of currency pricing, how they move, if they're trending one way, and then there's also commodity trends that you can lock in too. These are variables that help to support. So just like how when we broke down the Australian dollar weakness, meaning like if the dollar is strong versus the New Zealand dollar and the Australian dollar is weak against the New Zealand dollar, how can the Australian dollar possibly be strong versus the U.S. dollar, where a market dictates direction? The markets are always the best indicators. So that's what you want to always be focused on, and that's happening right now so clearly. Once again, like we said earlier in this webinar, I've been saying it for the past couple weeks. You can even go on and see our videos on tfnn.com. We are off the pandemic trade. The pandemic can stay with us. We could still have more lockdowns. Will they still influence the market? Yes. But now, no matter what, we are back to the critical numbers. Inflation, employment, these are huge. No matter what, they dictate interest rates, they dictate interest rate trends, and also what federal banks do, which then impacts what? Currencies. They impact all markets. It's just a matter of how the ripple effect happens. You know, it's just like everyone, you know, when they're a little kid, notices that when you throw a rock into a pond or into still water, you know, the rock falls and it sends out a ripple of waves, you know, and that's how whenever certain trends are going, that's the rock that falls in the pond that sends out the ripples that, you know, it goes out in an equidistant way around what have you. You all know what it looks like, and then it hits the shore, which is never. It has different contours, so it hits different shores in different degrees. Some have a higher wave, some have a lower wave, and that's the same thing with the markets. Same type of ripple effects. So US dollar Canada, let's go back on to that one. Remember that overall we're a bear on this. Potential head and shoulders, maybe shaping up, maybe not. You know, we don't want to second guess thing, but with the pivot points and the stuff that we have going on right now, it does look like that is possibly our scenario to watch out for. I believe that that's where we're going with that one as well. You know, the fundamentals and the technicals are lining up, so we'll see what happens. Definitely in the short run, I think we have a good shot at seeing support getting tested again. Right now it's only slightly lower on the day, just below the highs of the day, but we're coming off a lower move low. after a lower move high. So remember, the trend is your friend. Do not forget that, folks. The trend is always your friend. So trade the action, not the reaction, unless you're very experienced and you gauge your risk. So remember how we outlined trades that we said these are trend trades, and then there's counter trend trades. When you're counter trend, always be mindful of your risk, for sure. A trade is a trade, a signal is a signal. You always got to stick to your methods and your systems, but remember that your trend trades are always where you have the higher probability of success than when you're being contrarian. So yes, there is a lot of money to being a contrarian, but then there's always a lot of money to be lost being a contrarian. So remember, the trend is your friend. The reason that adage is there is that over the long run, if you are on the right side of the trend, you do well more often than you do not. So that's key. That is crucial. Remember, also, if you haven't subscribed to our YouTube channel, to go to it and check it out. You can see Forex Trading Unlocked on YouTube. Once again, we usually have our, now since we're broadcasting live, you would see our streaming live right there. When it's not live, there's our weekly analysis up there. We have past videos to check out here, are always our most recent uploads. We have created playlists here, like today's lessons. Usually those are the recent ones from the past couple days, this week, past weeks. And then you can also go down and see our e-option list. We have stuff with the Nadex, tfnn.com, and we also have playlists here where it's organized. Check out our e-option stuff. Check out our featured channels as well. Like them as well. We're all working together and giving you great content. We're all also followed all the regulated directions from governments around the world and markets around the world. Obviously, these are all predominantly U.S. Also, I deal with international firms and exchanges as well. So, but yes, everything we do, just like we started off this webinar, has disclaimers. Remember, this is all for educational and informational purposes only. Check out our YouTube channel, check out our videos, even check out we have our lessons also. So that's another thing, if you go down them, where we have just different lessons on, well, you can figure it out. You can go check around. And also, if you're not a YouTube guy or girl, go to Twitch and check out our channel there. You can see we have 5 people live watching right now, no one on the chat room. And when you go to our channel here, it has schedules. It also has our access to the book and some other endorsements and other things like that. So if you're not on our website, forex-trading-unlock.com, where you should always come to for your information for Forex, and when you're here, check us out, pass us on to your friends, tweet us out to your friends as well. Check out our products, courses, and services. We do mentoring, individual trading courses. However, be careful, our trading courses are pretty booked up for the next few months, and we will be limiting them towards the end of the year until the year 2022. Forex Market Center is under reconstruction, and then we have that book, High Probable Japanese Candlestick Patterns, which if you check out that page, we have a little video, a YouTube video that we did. It's about the book, teaches you about the signals a little bit. We talked about some of them today. And then there's the book here where you can, you can obviously buy it. I'd love that. You can share it with your friends, or you can preview it and you can get a little gist of what's going on in that book as well. And also along our navigation bar, for markets, easily you hit the Forex tab, boom, you can go and look at all your major markets. Instead of going to the workstation page, it's all organized, you click on it. Or you can go to your different crosses like Euro CHF or Canadian JPY and go all the way down here. We got New Zealand dollar, we got Canadian dollar, Turkish lira, Bitcoin, CNH, they got the South African rand, Hong Kong dollar. So these are all resources for you. You notice that we're doing this live. There's no pop-ups. Do we have some ads? Yeah, we got one little ad here outside of, well, this is streaming live what we're doing. But see this? We don't have ads all over the place. They're not popping up. They're not screwing up your computer. You can log in from your phone. Here's another ad all the way at the bottom. So for the most part, you never have more than 2 banners on any given page. Sometimes there's none. Tools. Then we go to here. You have your NinjaTrader online trading platform. If you're not using that platform, it is a fantastic platform. If you're using MT4, even for your analysis, I would still download NinjaTrader and use it to store your information and use the tools on it. We have webinars on NinjaTrader. We have a relationship with them where we work together. We backlink each other, and we are not partners, but we do support each other's efforts and promote each other. So multi-charts is another charting software which is partnered, is an offshoot of TradingView, which supplies the charts that you saw in our webinar. And then if you want to sign up for our email, whatever, double check our disclaimer, which if you go to the disclaimer page, it's there, but at the bottom of every page on our website here, we have our address, we have our website, or our disclaimer for everything, for Forex, futures, options, the whole thing. Be mindful when you go to sources for information about trading, whether it's Forex, stocks, options, I don't care what it is. Make sure that they have disclaimers. If they don't have disclaimers like I do, or TFNN does, or eOption does, or the Nadex Exchange does, they are not good sources. Every true source, every true professional in the business uses disclaimers. It's not just to hide behind something. It's there because they're being honest. They're giving you honest information, what they really believe as far as opinions, or what they legally can say as well. So I disclosed what I was long in the crypto space. Currently, right now, we only have a couple of FX positions. We disclosed those. We're winding out of those, waiting for new signals. We didn't talk about any of the equities and whatever, so I don't have to disclose anything there. So that is something to be mindful of when you listen to people on the internet here, and whether it's on YouTube, whether it's on Twitch, whether it's on their websites, I don't care where it is, even CNBC. I know a lot of the people, some of the people that have been on there for years, especially in Chicago. I know them from the trading floors. They're very legitimate in their opinions, and then there's some that are media biased. The ones who are floor people, you know, they seem a little off kilter from the other people that you're talking to. But remember, they're not selling you anything. They're following the disclaimer. They are not pushing anything. You know, so that is something to be very aware of, guys, when you're out there and you're trading, whether it's Forex, futures, stocks, options, whatever. Be very mindful of who uses disclaimers, who reminds you of what the upside and downside of things are. You know, whether you're a beginning trader or an advanced trader, people like myself, people that I endorse or that endorse me, we all are part of a trading community, have been for years, and we have good reputations. You can go check out with the SEC, NFA, CFTC, the exchanges. There is nothing bad, no gray marks on myself or the other institutions and partners and associates that we do work with in the business. So be very careful when you're out there, folks. Trading is hard enough. Don't make it harder on yourself. And once again, tell all your friends about Forex Trading Unlocked. Make sure you like us and subscribe to us on YouTube. And we'll keep working with you guys. If you have any questions, doesn't seem like there's any on the chat. We appreciate everyone that showed up today and is paying attention. We're going to see how the markets end today. Remember, we have a couple of potential buy and sell signals forming. So either tonight or tomorrow we will be having another webinar where we will be looking into what's going on with the markets. All right. So if you guys, if there's something I did not cover and you want me to cover, even if it's something as, you know, the South African rand versus the Japanese yen or whatever, we'll take a look at it for you. Futures, absolutely. I mean, I started out in the futures business back in 1989. I started the SIBO and the options pit, the OEX, and running to UOL and stuff like that. And then I was at the CME for over 25 years in the S&P pit. So, yeah, been there for a long time, been in the industry for a long time, sharing this information with you guys in the trading community and trying to get you guys on the right track. So thank you for your support and hanging in there. We'll see you guys soon, all right? So forex-trading-unlock.com. Don't forget to go there, check it out. And then also, don't forget to check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And go to YouTube.com, and Forex Trading Unlocked is what you want to do a search and subscribe to, or do the same with Twitch. You guys have a great trading day. Good luck with everything, and we'll see how these signals end up today, and maybe we can get one out tonight, and if not, definitely tomorrow morning we'll run a session for you. All right, take care. You have a great day.